Hello and welcome everybody to episode 2 of our investing journey. I want to start off with a quote today, and the quote is, "Investing money is buying back our time." Investing is one of the best ways to grow and maintain your wealth over time. Now this is great. I love this quote because it's very important for people who are either just out of college, university, or even high school, maybe starting their first job, because they can benefit it from the most because they have a lot of time before retirement. Remember that time in the market always beats timing the market. So the more you can dollar cost average your way over your 40, 50 years of your lifetime, or even sooner if you plan to retire sooner, then you can benefit from the stock market even more. So I encourage anyone that's around my age, 18, 20, 21 for myself, or even any age, but especially those younger ages, go open a brokerage account, deposit some money. Doesn't have to be a lot. Some let you open with as little as $1, and you can start investing. That is the whole point of this video series, is to follow me in my investments and as I'm learning, and you can learn and grow from them as well. With that said, I have purchased my first shares in a company in my Wealthsimple account that you guys will be following. I purchased 4 shares of Dream Industrial REIT, and I want to show that right now, but remember that this is Dream Industrial REIT and not Dream Office REIT. I will not be buying any shares of Dream Office REIT, as I don't believe office REITs have enough growth, a future outlook in the next 10, 20, or 30 years. Why start your investing with REITs? That is a great question, and I want to cover that right now. Now, what makes a REIT a REIT? A REIT has to pay out 90% of its taxable income. This means that you get a quite high yield and monthly distribution compared to some other companies, and I have an example for you. As of this making of the video, Dream Industrial REIT pays out 6.01%, or about 70 cents a share, and this is paid out on a monthly basis. So every month, 70 cents a share. Now compared to a bank, and I used RBC Bank for this example, they pay out 4.44%, or $4.32 a share, but they more commonly pay out on a quarterly basis. So every 3 months, you'll get your $4.32 a share in your tax-free savings account. And this is why I like REITs. You get a nice monthly income every month in a tax sheltered or a tax-free savings account, which means you don't pay any tax on your monthly cash flow. And this is a great way to start building it up. You put $1,000, $2,000 in there over the span of a few months, however long it takes you, and you build that. Soon you'll start getting $2, $4 a month, $10 a month, and it'll go from there, and you constantly can reinvest that dividend. I want to cover some metrics you should be using when looking at a REIT. I do go more in depth industrial REITs with last week's episode, and I encourage you to watch that as well after you watch this video. I'll leave it down in the description down below. Now the first metric we want to be talking about is the style of REITs. Now I have a little cheat sheet here I'm going to read off so I don't miss any. For the style of REIT, I'm going to start with industrial REITs like the one I purchased. You have office REITs, healthcare REITs, residential REITs, then you have a mall, retail, and diversified commercial REIT. Now you want to make sure you choose the type of REIT that follows your investing strategy. Now for my strategy, I believe industrial and commercial and potentially residential REITs have a great outlook in the next 10, 20, 30 years. Now this is my opinion, obviously. You need to do your own research, and that's why I like to share some research with you so you can get a good idea of the REITs to be choosing, but maybe you think that office REITs might be good for you. Another thing to keep in mind with your style of REIT is where are the properties located. Now Dream Industrial REIT has properties in Canada, the United States, and in Europe, and this gives them a good position as they are getting rents in 3 different currencies, and it makes them diversified. If something happens in Canada or the United States, they're still getting other rents in places that may not be affected. This makes the REIT stronger in economic hardships and also helps diversify the currency income. It isn't weighted only on one currency. If the US dollar drops or the Canadian dollar drops, then they still have some stronger currencies coming into their cash flows. I want to talk about a very important number when REIT investing, and that is FFO, or funds from operations. I'm going to put the equation up so you can write it down. This is very important. So to get FFO, you take your net income plus your depreciation plus amortization, and you subtract gains on sales of property. Now why would you do this? It's because FFO is a much better representation computation the money that a REIT makes than your net income number, because the net income number can be, you don't want to be subtracting the depreciation that REITs can subtract, and this number gives you a great idea on how the company is increasing its bottom line and the funds from operation that it can use to reinvest back into its business. With REITs, you will have higher debt and higher payout ratios. As I said, REITs have to pay out at least 90% of their taxable income to be considered a REIT. Because they're considered a REIT, they get certain tax advantages. So it is in their best interest to be paying out a very large portion of their income. Now, with that said, REITs will have higher mortgages and mortgage debt because they need more properties to be making more money. You can only make the same properties so efficient. So with Dream, they're buying some in Canada, some in the US, and some in Europe, and they will have a higher debt to equity ratio. And that is with almost all REITs, and that will be higher than some other companies. Another tip I like to add that not a lot of other people hit on is that I love to go on the websites of the REIT that I am looking at. With Dream, RioCan, Killiam, Cap REIT, I love to go onto their websites and look at what they offer, what's easy to access, and some of new protocols that the companies are releasing. This is something I don't see talked about a lot, so I want to share it with you. Please go onto their website. I love going on the investor relations page. I love looking at all of their properties, seeing what their properties look like. It's kind of cool to see some, if they have some in your own city, or seeing some in Europe. It's awesome to see. It's great to see. It gives me a much deeper perspective on the REIT and what they do. I also like to subscribe myself to their email newsletters. I love to get the emails. I love to read it. It keeps me up to date and current with the events of the REIT. That is all the metrics I want to talk about today. I hope you enjoyed that. I hope my energy levels are high enough. I want to make sure these videos are exciting and informative at the same time, as I really want to stress that I want you to follow along with me. I want you to open a brokerage account. I want you to be adding money every paycheck. I want to talk about my paycheck contributions. Before that, I ask if you leave a comment down below. Tell me what you learned. Tell me if you already knew some of them. Share your thoughts and ideas for myself as an investor and for other investors watching this video. Now, for my paycheck contributions, I want to add between $25 and $50 a paycheck, but I also want to add a stipulation in there for any bonuses or overtime that I work. I also want to be adding that into my account. Now, I want to make it really simple with that. You don't have to do a super crazy number. It can be, if you can only do $10, then do $10 a paycheck. It's more than nothing, and it's great. You can buy a share, several shares every month, and build and build and build. You can compound over several years. You'll be really surprised with the amount of wealth and net worth you can grow over a period of several years. The reason I'm doing this every paycheck is because I don't want to hinder my living style today, but I also want to be growing and being able to afford a better tomorrow. And with all that said, I want to thank you for watching today's video. I hope you learned something, and stay tuned for next week's video.